following is an update and technical analysis on natural gas futures based upon the daily realm, where I had mentioned on the 16th of September 2023, we're trading spot price to 644, and I had remained adamant how beautiful this primary trading range channel based upon the March lows, just a multitude of reactionary lows really across the board to help strengthen the validity of this major price support. And additionally, the 253 monthly interval price support, big price support level, correlated with the 236 fibs retracement, call it 2467, 236 fibs daily intervals price support, additional price support down below, which was even bigger price support for any long traders and or dip buyers. If we went on to undercut the 50-day moving average, it would be an ideal, great risk-reward ratio on the long side with setting some stops below. Whereas short sellers, bear traders on the natural gas commodity wanted to see a nice, clean breakdown, solid red candle close breakdown sell signal below this primary channel to issue in a sell signal, great risk-reward ratio on a short trade setup to the downside. If not, watch for this primary reactionary downtrend line. It was a minor reactionary downtrend line with multiple reactionary highs to strengthen the validity of this price key functioning level, correlated with 382 fibs retracement, 2787 price support, price resistance. Right up above, call it a dual line of price support with call it a triple line of transitioning points with the 200-day moving average hovering up above. Whereas bull traders, long traders, they additionally, whether recovering and retesting this primary trading range channel, needed to re-challenge this primary reactionary downtrend line and break out above it. Break out the 3.8, pop the 382 fibs retracement level for a prolonged move to the upside, re-challenging the 50% fibs retracement 304. And then ultimately the top of the primary trading range channel based upon this nice, clean, concealed primary uptrend line, which is the base of the primary channel with multiple reactionary highs, reactionary lows, really across the board, cuts right through a ton of wicks. Really like it a lot there. We did have negative RSI divergence. We had multiple indicators with negative and or bearish divergences. So I was waiting for a breakdown sell signal if and when we got it to add an aggressive short trade entry. If not, bull traders and or long traders needed to defend this key inflection point really at all costs. And here's the update. And really to the button, especially if you're an active and or day trader, we need to getting rejected right amongst that daily price, daily downtrend line. And that was good for a 9.4% crash to the downside. And especially if you're an active and or day trader, to the button, correlating with the 253 monthly price interval of support and the bottom of that primary channel. That single day trade netted you 4% gains on a single day there. Completely, we ended up winding up completely breaking out of that primary, gapped up, which really notes how significant this primary downtrend line, minor primary downtrend line truly was, when you had a powerful move to the upside, taking out the 200-day moving average and the 382 fibs retracement, and that's when you had that gap up. Ended up gapping up, had a consolidation phase here, nearly backtested the 382 fibs retracement again, and was off to the races. Backtested, especially for an active and or day trader, really to the button, right off that 50% fibs retracement, netted you a nice 2.51% crash to the downside on a single day trade there. And then we ultimately broke out the next day. And here we are, hovering right up and retesting the top, potentially the top of this primary trading range channel. And that, in my opinion, would spell for an aggressive full trade, full short position, especially if we initially combined with the 618 fibs retracement, call it the 3.304 spot price resistance, and that would give me the utmost, most valuable short trade setup on a great risk reward analysis to the downside if and when we go on to retest that key inflection point. As of now, we are trading in no man's land, so you could additionally begin scaling in short here, averaging down, and then ultimately waiting for that much larger move to retest the 50% fibs retracement, and then additionally the 382 fibs retracement once again to hone in on and to re-challenge the potential moving averages. As of now, though, what is the reason why I am calling it an aggressive short trade setup is we do have a clean, bullish, confirmed golden cross continuation pattern in the moving averages. We additionally have the stochastics 1033 just spiraling up, having a clean bullish crossover right up above that 85 threshold. And it is just lights off to the races when it comes to momentum and stability. That is another check mark for a very healthy sign in the technical momentum indicators. You have your oscillator already soaring above its zero line threshold with a confirmed bullish crossover buy signal in the moving average convergence, just honing in up above, taking out everything in its path there. And we are now, what is more so significant within this trading channel and this trading posture at this key transitioning point, is we are going to begin to challenge this negative divergent high that we put in place with negative and bearish divergences amongst all four momentum indicators that we had challenged. And here in the RSI, we're beginning to challenge that key inflection point, call it a dead even as of now, whereas the moving average convergence is starting to slightly come shy of just going to tap on that previous trough there. And the oscillator as well still have it definitely has more room to work and or a lot more work to be done. But again, if these divergences get burned out, what would burn out these divergences is a complete solid daily candle close above the 618 fibs retracement and breaking out of this primary trading range channel. The top of the primary trading range channel, especially off this concealed primary trading range, major price resistance correlated with the 618 fibs retracement. So if we pop that level, if we take that level out, we will undoubtedly burn out any negative and or bearish divergences that had continued to construct on multiple indicators, and that will be it. Lights off to the races, a potential short squeeze higher to go on to re-challenging the 786 fibs retracement, a 3673 price resistance, and then additionally the 1 fibs retracement, call it 4.142 price resistance up above, and that would be a melt up. Talk about going into winter, a lot of haze and distortion. Natural gas markets in the UK and Europe, that would spell for a big move to the upside, in my opinion. If we take that level out, burn off these divergences on all 4 technical momentum indicators, and it would be lights off to the races and an all-out short squeeze setup, just destructing every short seller and or bear trader in its path.